Real estate investors, land developers, contractors, and especially build-to-rent community developers, let's talk about Boise, Idaho. This is your Market Minute with me, Corey Bonner. Buckle up. Here's what the data is saying. All right, let's get into section 1 here on the key matrix. And this is just a snapshot of what Boise is experiencing. So Boise is showing one of the more interesting rebounds across the Mountain West right now. Occupancy is sitting at about 83.5%, which is up 1.9% year over year. So absorption is actually outpacing new supply. Now, according to the ALN data, Boise absorbed about 2,400 units over the past year, with about just over 2,100 new units delivered. That's a positive spread, which tells you the market is tightening, slowly, but definitely tightening. Now, let's get into section 2, rents and concessions. So asking rents are up about 3.2%, and effective rents are up even more, around 4.2%, which means concessions are coming down. Properties offering concessions dropped from last year by almost 30%, and the average package is down to about 6.5%. That's a pretty strong signal that owners feel more confident holding that line in this market. Let's get into section 3, what the graph is showing us. When we look at the data coming from ALN, you'll notice occupancy trending upward, while both market and effective rents have climbed steadily most of the year. That's what real recovery curve looks like. Not spiky, not volatile, just consistent demand catching up to the supply in that market. Now let's jump into section 4 here, the submarket action. The strongest submarket, West Boise, Meridian area, up a massive 10.8% in occupancy, which is interesting. That's where our units are at. Now, Caldwell and Napa are still volatile, but they're also showing the highest effective rent growth at 7.6%, which is wild considering the occupancy drag that we're seeing. And it's interesting. We're seeing more moving to that area of that tertiary market. So let's jump into section 5. What do we see in the pipeline, and what's the future outlook? Looking ahead, Boise still has meaningful supply coming, over 1,200 units in West Boise, the Meridian alone, and more than 10,000 in the central and downtown Boise area. Leasing starts spiking again in Q1 of 2026. We're going to see this. We had another community come in the Napa area that we're seeing the same thing. Q1 is going to be big in 2026. So the next 12 to 18 months will tell us whether the market strengthens further or will this level off. We'll yet to see. So what's the takeaway? Boise was one of the fastest markets to cool. It essentially had like a 17% correction. And it's becoming now one of the most stable markets, warming back up. And we're seeing that in our own projects that we're managing in the Boise market. So if you're investing, you're developing, or looking at build-to-rent projects, Boise is quietly shifting back into that opportunity mode. But with over 20,000 units in that pipeline, timing, location matter more than ever. I've got more markets coming up soon, so follow. Comment on the markets you're curious about. I'll speak more on. If you want a deeper insight on how build to rent can be done right in today's market, grab my free case study at coreybonner.com/case study, and we'll see you on the next one.